But I'm going to give you an overview on our 60-30-10 program that we have lenders that are doing. It's basically if everybody, does everybody know what the 60-30-10 is? No. Okay. 60-30-10 is a bridge financing lender. 60% the lenders will finance, 30% the sellers will hold, and you're only bringing in 10%. It is basically right around a 10% only, interest only program. No prepay penalties. They're bridge lenders, and they will also lend if you have to rehab the properties. As long as your rehab money and your acquisition of the 60% does not exceed 65% of the after repair value. So that's basically what the 60-30-10 is in a nutshell. I know I'm on a very quick time frame, so here we go on that. That's exactly what I just told you. They are all recourse loans. These are not a non-recourse loan. You're going to actually personally guarantee these no matter what the loan size is. Even if you're greater than $1 million, you're still in a recourse loan on these. The best thing about these lenders, they don't charge a prepay penalty, which can save you literally hundreds of thousands of dollars depending on the loan size. They want to see you out of this program within about 12 months, and then they want to refinance you into a more conventional mortgage. If you go past the first year, I believe your interest rate will jump up to a rate around a 12% interest only, and then if you go into year 3, you're going to be at a 14%. So it's to your benefit to get out of this as quickly as possible. These lenders want to get you into, they developed this program to get you into the property at a low down payment and allowing you to rehab the facility to get it up to a good occupancy level. Then they can refinance you into a more conventional loan to buy out the seller's 30%, and then they're going to get you into, like an 80-20 basically. And then that way, when they get you into an 80-20, if your loan size is greater than $1 million, you are in a major market, then you can be into a non-recourse loan and it's off your personal credit. Everybody with me so far? Someone, whoever said that, you need to walk up to the microphone because I am not going to
10%.
He asked what's the starting.
Pardon me? And you yelled out what? I can't hear on one side. Okay.
I said the answer was 10%.
Okay, thank you. All right. Now these are what, your seller has to have a minimum of 30% equity to qualify for this. Your best bet is having, the sellers that have more equity in the property, but it's a 30% minimum. That's pretty much common sense. Just hope that everybody realizes. This is ideal for your under $1 million loans. This is perfect for that, especially if you're getting into these new startup ones where you're at like a $700,000 loan and it needs some major rehabbing, but once it's done rehabbed, it's going to be worth $1.5 million. These are perfect programs to get into. All right, your loan size under $1 million. This is basic, and this is all on the website too. I believe Monica has it on there, but it's not 12 to 14% is when you get into years 2 and 3. Typically, it's right around 10%, and everybody knows what the interest-only loans are, right? Okay, perfect. Don't have to explain that. 1 to 3 year terms. They don't ever go over 3 years, so you better have it done within 3 years. 1 to 6 points to the lender, 2 points to the broker, which is myself and my partner in New York. We each get 1 point. We split. That's paid at closing. The good thing with these guys, depending on which lender we do, they will allow you to put some of these points or all of them into your loan size. They will also let you defer if you're at a 0% occupancy. And you have to, because they don't have an occupancy minimum. So if you're buying a property at a 0% occupancy and you have to rehab it, they will keep X amount of money into an escrow account that you will be able to pay your payment without having an occupancy in there. Which is, a lot of lenders don't do that. So it's something that it's a good selling point. No prepay penalty. They offer rehab money. All your loan sizes over $1 million. If anybody has any questions, just get up and ask real quick. I'm trying to get over to the bond program. Has everybody heard of the bond program that they're offering now? No. Okay. I'm trying to get to there. Okay. The bond programming basically is 100% financing. First lenders that are actually doing these are actual government 144 bonds. That's what the bond is. They're all government subsidized bonds. You want to be 8.5 million is the wheelhouse. They'll do them around 5 million on certain cases, but 8.5 is typically the lower number is what they want to do for. It is actual 100% financing. All right, now this is all the wet DPA. Let's get through all this stuff. The requirements on the bond funding. They do pretty much everything that you want. I'll get to the, here we go. All different types of rehab loans. They'll do agriculture, your multifamily units. They'll do business, startups. Everything that you can think of, they will do as long as they qualify. Only qualifications you have to have between 2 and 4% cash in your bank of whatever the loan size is. That is a requirement. They will not give you the money without it. So if you're looking at a $20 million loan, you know, you're going to have between $400,000 and $800,000 in your bank account.
Yeah, local fines letter?
Nope. Nope. Nope.
So it's real money.
It's real money. I mean, you got to have some. I mean, if you can verify that you have that money in there, because you're dealing with the big boys on this. They're strict. They have normal retainer fees are $2,500, which is a refundable retainer, as long as the loan is above $500,000. When you're into bond programs, your retainer is a $5,000 retainer fee. The good thing with the bond guys, they let you put all your points into it. So if your points are 6%, they'll let you throw that into the bonds. You get all your money at one time. Huge, huge, huge. I mean, they just started doing these recently, so it's new into the wheelhouse of exactly how everything works, but once you get under contract and they give you a preliminary pre-approval saying, yeah, this is something we can do, as soon as you get under contract with them, you're going to start talking directly with the guys. And then I'm basically on the conference call. Everything gets CC'd through me. I'll be there, and I'll be processing and getting the paperwork to them. But once you are in connection with the bond guys, you guys are going back and forth, and they like closing quickly. Yes, sir.
I didn't quite get the minimums, the numbers on the loan amounts. You said something about you could go as low as 5, but it was 8.5.
Yeah, they'll look at some properties at $5 million. Some different deals. If it's a $5 million loan that you need, they'll look at them, but they're going to decide themselves if that's something they want to invest in.
Well, what's the high side?
$500 million.
Oh.
Yeah, they do international also. This will go international. These bonds, they will go. This sheet is, I know it's on Monica's website. I believe it's at monicamaine.com/Ronnie. So you can get all this stuff. If you have any, I know I'm going through this super, super quick. You're going to have to get up because they're going to yell at me if I don't think that. I know I'm going through it super quick. Everybody here, does everybody have my business card here? No. Good, you're not getting it either. No, I got cards. I'll give everybody a card. You can call me and I can answer more questions for you on a one-on-one basis. I know it's a little hectic. I know I'm normally up here for 2 to 3 hours talking about this type of stuff, but I got limited down to 8 minutes. So,
on the 8.5 million, does it have to be for one project, or could you have like a package of 2 or 3 projects for this?
that's case by case.
Okay.
Sometimes they'll look at them. Depends what you're trying to submit in. They're not going to look at 4 or 5 things. It would have to be minimal, maybe like 2, 3 things together.
Okay.
And they look at everything as a case by case basis. So nothing is etched in stone on this stuff, So you might have one property that's $20 million and another property that's $8 million, and they're going to like the $20 million better than the $8 million just because they look at them case by case. Yes, sir.
Do they want a minimum cap rate, like a 10% or
Nope.
5?
No, they'll look at everything. When you're submitting, you will submit the same 3-page worksheet that you do for if you're buying a multifamily. You're going to submit the same thing. I submit that to the bond guys. They're going to look at it and they're going to say, okay, this is something I think we can invest in. And then they'll come back to you and they'll say, okay, here you go. We had a guy, he was wanting to buy, I think it was 6 properties down in Atlanta, Georgia. 6 or 8 properties. It was $23 million. They liked the deal. There was 6. They were not all 6 different properties. They were in a nice little area. They looked at the numbers. They gave them the preliminary pre-approval. Everything. We started going on it. The guys submitted to me, and they did the cardinal mistake. They submitted to get pre-approval on everything before having the damn properties under contract. So the seller's like, oh no, now let's renegotiate shit.
So 4% cap or that means nothing to these guys?
These guys, because they're looking at everything and they're seeing what it's going to be if it's an actual profitable venture that they're going to sink their money into. And like I said, they'll look at everything case by case.
And so for us to qualify, the only thing we need is 2 to 4%.
Yes. You're gonna need. I mean, you're obviously you're gonna have. You cannot have bankruptcies on. This. I guess I should be a little more clear on this.
Is this case a personal credit?
Pardon me. Wait. You get to there. You cannot expect to go and get $20 million or $8 million or $10 million if you got shitty credit, you got bankruptcies on that. I tell everybody, if this was your money and I came to you to ask you this, would you give me that money? And if the answer is no, the answer is no to them. So look at your stuff. I mean, you might want to have an equity or a credit partner that has solid A credit, or even an equity partner that has a couple $100,000 sitting in the bank and they got good credit. Have them and cut them in on the deal. Say, okay, this is what we're going to do, blah, blah, blah. Have an attorney draw up everything. Don't just do it on a handshake or on a napkin, because that's going to get you in a lot of trouble. Yeah, there you go. Now this is on ones, the 10 million up to 500, no caps. This is a different bond company that goes, because there's 2 of them out there. And these ones here, they go between 10 and no cap rates, nothing. Up to 30 years, they're interest only during on your construction stages. Your interest rates are usually between 5 and 8. Now, if you're putting up something for collateral that to show for your couple $100,000 that you're going to need, they got to be existing and they got to be created, and you got to be able to prove it, verify it. So you might have a business that's worth a couple $1 million, and you want to use that as collateral. They'll do that. Question.
The qualifications on the sponsor, don't they go a little deeper than that as far as like what your track record is with this kind of property if you're doing something that big?
Oh yeah, they're going to want to see it. You're not going to be First of all, you're not going to be a brand new green investor, right, real estate purchaser, thinking you're going to go buy an $8 or $10 or $20 million property. Anyways, yeah, you're going to have some type of experience. And if you don't have experience, partner with somebody that does. Find somebody, if you don't have you need some experience. That's even on, when you're looking at anything $5 million and above with any regular lender, you're going to need experience. I mean, even when you're at the $3 million, they're going to want to see some type of experience. When you're at the $1 and $2 million and below, that's the little different story. You can get by with just saying, yeah, I'm a real estate investor. I've done this, and that. Yes, sir.
Let's suppose you've got
Closer.
Okay, if you've got a seller that has, say, maybe a $20 million portfolio, and he wants to blow the whole thing off one transaction. Can he then put this in a land trust back, and then now?
I don't know anything about the land trust stuff. That's not my.
Here's the point. Can you put it in another entity then, and then he becomes partners through documentation where he now goes in and uses his experience and acquires the property, and then through other documentation gives it back to you?
No, they're not going to let you do that, because that's basically you're trying to do a cash out refinance, go doing a loop-de-loop bullshit hole like that. They're not going to let you do that. You're dealing with the government on this, man. Come on, they're not going to let you do that. Yeah, they're not going to let you do that, because what you're basically trying to do is say, okay, I'm going to start an entity. I'm going to put all this into a different entity. I want to sell the property to myself, basically. That's the way you explain it. You're going to sell it to me, basically myself, so I'm going to sell the property back to myself. They ain't going to, you know. All right. Any other questions? That's it.
Hi everybody, this is Monica Main and I'm a self-made millionaire, and what I'm going to do is actually show you how you can become a millionaire as well. Listen, I got started with something called real estate investing, which I know you've heard of, everybody's heard of it, over 20 years ago. And I promised myself that when I became successful, I would actually share this information with people for free. And so when I got started 20 years ago, I started the same way that a lot of people start. I started off with going to seminars by real estate gurus. I saw late night infomercials on TV. And I ordered all these products and found that none of them showed me what we call the nuts and bolts and how to do everything in the business. In fact, it didn't even show me how to get started. And so what I promised myself is that once I became successful, I would actually go out and share this information with people. So that's what I'm going to do. And so for those of you that have been really wanting to get started with real estate investing, especially what we call passive income real estate investing, which is the most powerful wealth building tool out there, and especially if you want to get started with no cash and no credit, then you absolutely must get this book. This is my book. It's a best-selling book called The Scratch Millionaire. You'll be getting this book for free. In addition to that, you'll be getting my brand new 2-hour audio series along with it that'll show you exactly what you need to do front to back to get started in passive income real estate investing. And you can also get into what we call aggressive income real estate investing as well, which is when you want to flip properties for cash. So you can get started in both passive income as well as aggressive income real estate investing. And this book and this audio series will tell you exactly what to do front to back. This actually includes more information than what you'll ever get in any of those guru courses that'll cost you hundreds and sometimes even thousands of dollars. In fact, everything that you'll learn in both this book and this 2-hour audio series is more than what you'll actually learn in some of those guru courses or seminars that you go to for 3 days and spend $3,000 to $5,000 for, and maybe even get 10% of this information if you're lucky. So I'm actually giving this to you for free. All you have to do is cover shipping and handling for me. That's it. That's all you have to do. And you'll learn absolutely everything you need to know to get started with passive or aggressive or both real estate investing with no cash and no credit. It'll show you how to use other people's money, because that's how the rich get richer, and let's face it, that's how the poor get poorer, is that they don't understand how to use these strategies and these techniques and how to use what we call OPM or other people's money. Do you think somebody like Donald Trump or any of those big-time multi-billionaires or multi-millionaires, do you think they actually go out and use their own money for down payments, for acquiring property, to do deals? No, they don't. They understand how to use OPM or other people's money, and I'm going to show you exactly how to do that, how all the rich do that, and how you can do that as well. Just because you're a little guy or just because you're the average Joe out there doesn't mean that you can't tap into these resources and tap into these strategies. You just need to know how to do it. And I show you exactly how to do all of that and more in this book, as well as this 2-hour audio series. You'll also get the special bonus reports that I have as well. Just scroll down through this website, you'll see those reports that you'll be getting as well on top of this book and this 2-hour audio series. So again, it's for free. Just pay for shipping and handling. That's all you have to do. And then go through all of this stuff. You'll actually learn how to do it, how to become a very successful real estate investor with no cash and no credit. And you have nothing to lose and absolutely everything to gain. This is Monica Main signing off. I'll see you at the top.